Hey traders, Raghee here, and in this video I'm going to walk you through two of the trades we took this morning in the Simpler Futures chat room. So these are the alerts that I sent out, and let me see if I can bring, there we go. All right, so this was an alert here, all right, to buy the 47.75 pullback in crude with a 10-cent stop and initial target 95. Now let's talk about what this trade was. It is what's known as a breach retreat. Now, I typically do this for the indices, S&P, NASDAQ, Dow, Russell, stocks, the ETFs, sometimes the bonds, and crude. I won't do this for gold. I won't do this for markets that don't track pretty tightly with the equities markets. Crude does. So this is eligible for that clearing range breach retreat. And one of the things that we'll dive into a little bit more detail in the premium video, but I want to touch on here with you all now, is the price movement range that we had from high to low was so darn narrow. This 19-cent range during the clearing is about half of what we typically see. So one of the things that we waited for was a much lower or conservative level to be a buyer from, which is how we got that 10-cent stop, where we kept things pretty tight in terms of if we're wrong, we're going to know very quickly. So that was really it. And then what we want to do is make sure we're proactive about stepping out in front of size, hence the 95 exit. All right, then we move on to the NQ. Now the NQ is still in limbo. I'm recording this at 12:01 Eastern. So the NQ is still in limbo. We have, let's bring this up. So the NQ is still open. We have another hour of trading for the day. This is to buy a 680, right? Or 655. Now, why two levels? The difference is risk, right? This particular level that is the 680 is higher, but the distance to the stop loss is further. For a lot of traders, they're going to say, you know, Rog, it's a shortened day, it's a day that has lower volume, etc. I'm not sure that I want to take a potential 40 pip hit or 40-cent hit, 40-point hit in the NQ from 80 to 40, right? But I would be fine, and I'd be more comfortable taking 55 if we get there, taking that to 40 and calling it a day, you know, if we get that opportunity. Clearly, that has eluded, the second entry's eluded us, which brings up a point. Have multiple levels. The way that I like to do it is I'll have an aggro, I'll have a moderate, and I'll have a conservative level. Aggro is the one that's furthest from the eventual stop loss. Moderate, less, and conservative has the least amount of distance from the entry to the stop loss. So for some traders, they didn't take the trade because of the risk or the day. For other traders, they're waiting for the more conservative entry. Hasn't happened, okay? And then ultimately what we'll end up with is a time-based exit where if I get out at break even, great. If I can get out with a little bit of profit, fine, but I don't want to take this overnight. Okay, so there's a tale of two trades this morning. For some traders, they're still waiting for that 55 entry. And, you know, no sense in, at this point, waiting for something where we're just running out of time. I mean, the markets are going to close very, very soon. So keep that in mind. Keep timing in mind when you're putting on your trades. You know, what's your time horizon? You know, for me, it's self-imposed. I want to trade the first 2 hours of the day. So my self-imposed time horizon for entries are from 9:30 to 11:30 and then Eastern time, and that's it. So think about those types of filters that you put on in terms of your entry windows. Not just risk, but your entry windows as well. Okay, gang. Have a very happy Christmas. Have a wonderful weekend, and I'll see you on Monday.